Treasury Secretary Paulson's and Treasury Secretary Geithner's two programs, the TARP and the PIP, are actually sort of minor fraud compared to the other frauds. The real fraud was the lying that was done to the American people, where within a year you got reports that the corporations had paid back all of the debt that they had owned, that they had owed to the American taxpayer. And every American taxpayer, or virtually everyone, knows that that was a big lie, and that that less than $2 billion that those two programs put into the economy and allowed banks to pay back on were not nearly enough. And what happened was the government figured out that the Federal Reserve of the United States of America is basically ungovernable and can act autonomously. And that's what happened. The Federal Reserve, there wasn't enough money at all, started printing money and pumping it into the economy. We've already gone through at least two, and maybe someone will correct me at a later point, perhaps 3 6-month periods of what they call quantitative easing. And the way they work this out is that they give treasury bonds, treasury bills, to Goldman Sachs and all of the other great investment banks. These are given free to Goldman Sachs and the other big investment banks, and they start selling these bonds. When they do that, when they start selling those bonds, they don't give the money back to the United States. No, not at all. But what they have now is lots more money capital. So quantitative easing has usually worked on a pattern of $100 billion a month for a 6-month period. If it's been done 3 times, then that's $1.3 trillion right there, given to investment houses free. Those investment houses then offer them up for sale, and there's lots of people, including very rich people with balanced portfolios, who buy them, because as far as paper money goes, the myth in the world is that commercial paper from the United States, and especially treasury bills, are the safest investments. And a sign, though, of how bad the economy is that the interest yield is very, very low on U.S. Treasury bills and Treasury bonds today. But anyway, that's a way of, like, you pump more money into the economy. You have people right and left buying Treasury bills, and then Goldman Sachs and the other investment banks are free to invest it however they like. And in the end, it's we, the taxpayer, it's the federal government that then pays them back for the interest-bearing bond that they held in their position. Or they pay it back to the investors that bought these bonds from Goldman Sachs, okay? And while Goldman Sachs took advantage and used that money to make all kinds of investments that it wanted to do. So anyway, that's a kind of fraudulence without a doubt, keeping this from the American people, actually trying to pull it over the the wool over the American people's eyes, that the corporations had paid back their debt. Anyway, as I said, most people now know this is BS, and even in the mainstream press, you can see that the cost of the bailout has been perhaps $12 trillion, because the Federal Reserve has not just engaged in the program of quantitative easing. They have simply kept printing money and issuing bonds, sometimes unsystematically, to investment banks. the next thing that comes to mind is pump and dump schemes, which used to be very, very illegal, and now they are taken for granted. So I'll give you an example. Facebook recently made a public offering, which then put it on the stock market. Zuckerman, the head of Facebook, and other Facebook investors basically sold stock in Facebook. Okay, they sold the stock, knowing fully well, they sold it at a price, actually knowing fully well that it could not possibly be valued at that price. That Facebook was not providing enough advertising revenue, for example, and other service revenue to make its stock really hold up. And as many of you may recall, even within the first couple of days of its being sold, it went down nearly 50%. This is an amazing thing. That is fraud. And that's actually a form of insider trading that increasingly is not called on anymore, that the people that perpetuate this are not called for it and brought account to it. You also might remember many months ago that Jamie Dimon, the head of J.P. Morgan Chase, was called to congressional committees because anywhere between $2 and $9 billion had disappeared from the books. And so they had a series of interviews with him. He was not able to account for it other than to giving the kind of weak excuse, which was we were expecting certain paybacks. They didn't happen. However, we are an extremely solvent agency, and we won't make those mistakes again. After all, we're worth a couple of $100 billion, and we lost two. He admitted to losing $2 billion. Another famous fraud and crook, John Corzine, a former governor of New Jersey, who has become one of the financial elite. He is a billionaire. He ran a hedge fund called MF Global that lost $1 billion. And when he was called to account in Congress, he said that it had vaporized, that the money had vaporized, that actually so much money was coming in that there were accounting errors that could not fully explain it. Were any charges brought against him or anybody else? No, there were none like that. Okay, the other fraud I want to talk about is computer trading. Few people realize that most stock transactions that occur today are done by computers. This is not to say that they aren't given programmatic adjustments here and there and so forth, but they work on very complicated mathematical principles connected with variables in the economy. For instance, how do you react if a certain country's currency collapses? How do you react when it looks like the Greeks will never pay back their debt and so forth? All that is programmed in, and it's the computers that do the trading, okay? And they do the trading on stocks that are owned predominantly by wealthy people. It too is a form of insider trading, really, because this time it's the computers that facilitate this insider trading. It's the computers that basically direct the sales of stocks under certain conditions so that one day the Dow goes up 100 points, and then the next week it goes down 100, or 150, or 200, or whatever. It basically is insider trading that's very hard to be detected, but the government is having a hard time admitting to that and copying to that. We will have one more lecture